Joining us now is Eric Reimer, an author at Seeking Alpha. Eric, it's great to see you today. Thanks for joining us.
Great to be with you.
All right, so given the recent algorithm change and the controversy over Russia's invasion of the platform during the 2016 election, why are you still optimistic about the future of this stock? I mean, in the latest earnings report, we actually saw a decrease in the number of users in terms of time spent on Facebook.
That definitely was true, and I think that the newsfeed change was a necessary change to address that precise problem. Indeed, in the Q4 earnings report, we saw how daily active users in North America did decline for the first time in Facebook history. And I think Facebook's newsfeed changes, while disruptive initially to many advertisers, is in the long-term interest for the not just the growth of Facebook, but the very stability of Facebook. And I think Facebook has definitely had a rough past few months, and the stock prices bouncing back and forth has definitely shown it in response to both the newsfeed change recently as well as the Russia bots and ad scandal. And I think while initially there was a lot of worry over the Russia scandal in particular, both in terms of advertisers fleeing the platform as well as regulatory oversight, those have dissipated in recent months as Facebook has addressed it by increasing content moderation, by increasing their security teams, et cetera, and cleaning up misleading ads. And also, I think in terms of advertising revenue on the Russia scandal, we've seen how, despite the Russia incident, Q3 and Q4 advertising revenue has gone up. And so, while I think there's definitely market worries from these two scandals because of all the news coverage and et cetera, I think the actual impact on the bottom line may not be as bad as it seems. And furthermore, the actual newsfeed changes, while it may no longer have advertisers free posts or pages free posts be promoted as easily. It actually may be in the future more revenue for Facebook if they require pages to pay more money for better placement. And so ironically, it would be kind of putting the pages a little bit on the lower end to get more money from them. But it could be a lot of positives for Facebook on this, I think.
Eric, you mentioned the Q3 and Q4 showed strong ad growth. Of course, we were looking at that in the earnings results there. And this, of course, despite the Russia scandal. So why haven't advertisers been deterred? Why do you think that is?
I think it remains because Facebook is such a large platform for user activity. I mean, compared to other social media platforms, people are very active on Facebook. So many users hundreds of millions of users, North America and worldwide, use it on a daily basis for hours. And the newsfeed is a very prominent placement for a lot of that. And I think also in the future, Facebook has a lot of potential advertising growth as well from the new Facebook Watch app. And so Facebook Watch is essentially the new content streaming service on Facebook. And so far, it has shown great potential. And just a few months of being out, a Morgan Stanley report about 2 months ago showed that over 40% of Facebook users use it on a weekly basis, and about 25% of users use it on a daily basis. And so this in the future could continue to be a big draw for not just advertising revenue, but also for revenue diversification in terms of on-demand content revenue and also subscription-based revenue, even possibly too. And so I think advertisers continue to see Facebook as the platform where everybody is, and their recent cleanup the past few months has actually, I think, increased advertiser trust in the integrity of the platform, and so they know they're no longer advertising to perhaps bots or whatnot, but users now, they're advertising to real users, and those users also trust the platform's ads much more. And so I think even though there might be some transition pains, I think in the next year or two, Facebook will continue to grow despite all of this.
That's so interesting because I still think that there are going to be some significant growing pains. But let's move beyond the news feed, Eric. In terms of other Facebook products that may not be the core product, what are you most bullish on in terms of revenue products for them? I mean, what are you seeing with WhatsApp? What are you seeing with Oculus? What type of opportunities are you seeing even in Messenger?
I mean, definitely so far, almost the entirety of Facebook's advertising revenue comes from the news feed. I do think a lot of these other apps are certainly exploring new ways of doing it. I mean, Facebook Watch, as I previously mentioned, is the current big potential there because of how much of it's essentially a new foray for Facebook and offers many very obvious and clear monetization opportunities. I think for Messenger and WhatsApp and a lot of those other various platforms and products, there could be potential increased monetization there as well. I think those, I mean, Messenger and whatnot, they've seen some activity fluctuations, and so that might be linked to the greater kind of usage of Facebook, if how that goes. But I think right now Facebook Watch is definitely the big platform to keep an eye on because it's showing has been showing very strong user interest, and it offers a very clear and direct and perhaps immediate path to monetization.
Okay, with Watch though, in terms of the revenue that's going to have to go out, or the capital that's going to have to go back into Watch,
Yeah.
whether they're creating some additional series or they're putting money out for licensing, how much of a hit could that take to them? Because, I mean, this is a platform, sure, they're trying to grow up the video views even more so there if some of those views are moving away from the traditional news feed consumption. So how much could that actually be a hindrance instead of a help early on at least? And how much maturation needs to take place before they actually see the positive results on their side there?
I mean, that's definitely a very true point. And then I believe Facebook said that they intend to spend $1 billion at least in terms of a content cost for the Watch platform. And so, I mean, there definitely right now is a lot of cost being sunk into it. But I think Facebook overall is in a very good position to be spending that kind of capital cost. I mean, they have a strong balance sheet, no long-term debt, over $8 billion in cash, so they can easily make these investments without a big hit to the company's balance sheet. And I think it's. I mean, I think the initial strong surge in interest already, I mean, based on the Morgan Stanley report that they believe about 25% of Facebook users are using it on a daily basis, that's already very strong buy-in. And I think as the platform gets increased knowledge, people, know that it's there, and then it gets more strong content. Of course, the content streaming space is getting increasingly competitive, so
Oh
that's
yeah.
definitely one worry for monetizing it as well. I mean, you have not only do you have Netflix, continuing to roar out there, you also have Disney and a lot of other companies jumping in, and so it definitely may be competitive. And then so I think what will be determinant of Facebook Watch's success is how it differentiates itself. I mean, Facebook is
Yeah.
starting out with a big lead by their user base, but I think it's see like how exactly they differentiate themselves from all of this.
All right, well, it's going to be interesting to watch, pun intended, how they turn things really on and quickly and ramp things up for that.
How many puns did you just bring into that?
All
Amazing.
the puns.
All right,
It's Pun
amazing.
Friday.
Rad, wow.
Very punnable.
Thanks so much for joining us today. It's Eric Reimer, author at Seeking Alpha. And for more information on Seeking Alpha's marketplace, visit seekingalpha.com/marketplace.